Good morning, everybody. So what the bonds are doing is pretty interesting. So just some like table setting. We're at the end of the month, last day of the month. When it comes to Power 3 on the monthly time frame, generally the last week of the month caps the monthly range. So it's not surprising that we've seen pretty aggressive price action against the higher time frame bullishness. Let's go ahead and get calibrated with where we're at. So yeah, we see that we've pretty much had a strong rejection. We're not really seeing too much of a correlated like cleanliness, right? We are inside of a consolidation, and we do have NFP this week, like I talked about on Sunday. Those of you that trade gold and were here when I was talking about gold and some of these other assets, we got oil drop into the target I've had. Run on stops up here, drop down. Gasoline is also declining from the fair value gap. Silver, gold, I'm not surprised that it came down and really punished sell side. We talked about that being, not too deep of a sell side rate, but we did talk about how if it is going to continue going higher, I would like to see some type of drop. Right, this high to that low should be able to act as a BPR. And if we start, looking like we want to target this, we do have relative equal lows down there. I'm going to just assume that we're going to continue. Today, maybe it hangs around because it's been so bullish. Again, the last week of the month is generally a retracement, especially if a higher time frame level's been met and we've been accelerating aggressively, either to the buy side or sell side. Right, we got the yields. We've been talking about the yields. Retracing to then continue to drop. This high to that low. If this high here creates a failure swing at this low, and then it displaces inverting this fair value gap, that puts this high into a high probability condition. That would be what's called the type 2 dealing range reversal at a quarterly bullish order block. Right, and then of course if that goes higher, that's going to impact the DXY and will likely send it higher. For now, I'm not fully behind it. We're kind of in a 50-50 environment, right? You go from high to low, especially if you go from this high to that low. We've literally been stuck inside consolidation. You want to keep your eyes open to headlines that are happening in Europe. If something pops off and the whole world ends up getting involved, you don't want to be in the market at that time. Right? You don't want to get caught in a bad situation. So we're in a very, very risky environment overall. But nonetheless, those of you that have been here with me for the last year plus, it doesn't matter what condition we're in, we're able to find something. All right, so yeah, with that being said, we're going to see how the euro treats this. These up candles are an order block. So you take that low to the open, drag that over. We have a fair value gap in here. This high, or this price action going higher to go lower. That should act as a balanced price range. Tapping into it once more is not really too concerning. We do have SMT at these lows. So we definitely want to keep that in mind. If it inverts this level, trades aggressively above this, and then inverts this fair value gap, that would then put these equal highs in jeopardy, and then we have the volume imbalance too to target. But if we can break down, get back below this, then this trendline liquidity will become something we want to look at for the currencies, euro. All right, and let's go to the Nasdaq. If we look at it from this time frame, right, we do have the order block there on the 8 hour. The daily has it too. We have this. Let me actually measure that out. We have news at 7, so we're going to see what happens going into 6:30, see what kind of manipulation we can get. I wouldn't be surprised if Asia's high gets taken. We're very close. If we are going to continue to drop, the way it delivers above this high is going to be a very strong indication. This low to that high may leave a balanced price range. We got buy side and sell side delivered, overlapping fair value gaps. So we should not see price come back to the 50% of this. Okay? So again, if it just starts raging through this high, we still have that order block that I just highlighted for you guys. Something we have been marking off to and monitoring is this as a potential market maker buy model. This may simply just be a distribution phase inside this large potential market maker buy model. Something you want to keep tabs on though also is if this fails to like hold this structure and it just starts to displace below this and kind of shows that it's going to fail to deliver the market maker buy model, that's a strong indication that you don't want to look for buys. You want to look for shorts. Right? So market maker models, if they complete or if they fail, it's giving you a very strong indication of one thing or the other. We are always in, no matter what time frame, no matter what day it is, no matter what assets you're trading, we are always at every second of every single day in some form of a market maker buy or sell model, program, whatever you want to call it. That's just a fact. And for those of you that get deeper into the market maker model discovery, things become a whole lot more clear. What's up, Byron, Tony, Mike, Fotis? Everything is fine. Yeah, Lucas, everything's solid. Hope you guys are doing well as well. And we're going to see what happens. Again, my expectation today, because it's the last day of the week, it's really low. I have a low expectation. We're in consolidation. We've been pretty much aggressively pushing to the buy side overall throughout the whole entire month. Right, so if you think of the monthly candle, right, the month opened up over here, dropped down, gave the wick, manipulation, rallied for the middle 2 weeks. First week was the manipulation. The next 2 weeks, as you could see here, were expansion. And then going into this last week, you could see that, you know, prices pretty aggressively repriced, right? And then now currently we're kind of just stuck, right? Stuck inside that range. We were watching on Sunday this low to that high. We were saying that if this low and this fair value gap gets invalidated, that would put us in position to want to seek sell side delivery. A lot more of a deep sell side run. That may come eventually. We'll see. We're not going to pick tops. If this was the 5-minute chart and you saw price do this, you would be telling yourself that this is not bearish. That may change soon, but we don't just assume. Okay, we have a process to validate whether something has looked to continue the higher time frame move, or if it's going to change up and end up going the other way. Okay, and that takes time when you're using these higher time frames. Day to day, obviously there's ways to use session highs and lows for day to day like bias identification, But when it comes to overall narrative, underlying premise, like what price is overall doing in a more long-term, quarterly, monthly perspective, you're going to want to make sure you're using the validation principles that we utilize to validate lower time frame ideas as well on the higher time frame. And the easiest protocol that we discuss all the time for validation or invalidation is 3 PD arrays below us, right? Are they getting violated or respected from where price is at? Or 3 PD arrays above us, are they being supported or disrespected? You know, is price in an overlapping type of delivery where all the candles are kind of stacked on top of one another, right? Like this. That's telling you that the conditions are a bit more shaky, at least for the time being. That's a low probability condition when price is going sideways like this on the higher time frame. If it's on the daily, same thing, just more on a closer basis. But yeah, these are things that we're keeping in mind. That's why on Sunday, I told you guys that we're probably going to continue to want to seek buy-side liquidity. Right? Yesterday, I took a couple opportunities with my private group, the buys, and then I had a student that picked a top. He's actually in the chat right now, Byron. He's a savage. Okay. We have a lot of savages in this community. But yeah, yesterday was pretty interesting. All right, so hopefully you guys were safe. And let's see if we can capture some stuff. Do you guys have any questions? Again, I want to see if we can target the equal highs up here. And our line in the sand, we have the 50% of this 1 hour fair value gap. We have this down candle. Oh. We have this down candle here that's lower than this low. Low, high, lower, low. So I'm honestly going to... Actually, I'll probably get rid of this unless we push up into that level. And we will more so focus on this being a bearish breaker. So higher time frame narrative is still bullish. So anything going higher is classified as potentially counter trend, or going lower as counter trend potentially. And we'll see if it further confirms. It takes time for the narrative to change, just like turning a big ship in the ocean. It takes a good amount of time, a good amount of effort. It's, you know, it doesn't just turn like a Ferrari does when it hits a corner. You know, narrative does not change. That's why you want to get to the higher time frame, understand what the bias is or narrative. Bias and narrative are different, right? They're separate, at least the way I classify them. And then you want to stick to that higher time frame narrative, even when price is going against you. That's what helped us when price, in this instance, ran all the way up here on the weekly perspective on DXY. That was here. Right? That's how we were able to continue to trust that this was going to still favor downside and then target this low, which we ended up targeting. Right? We've held the bearish narrative overall. And if we start to see things change, right, 3 PD arrays get violated, you know, things turn from solid bearish PD arrays to inverted bullish PD arrays, you know, and then intermarket relationships as well. If like the yields start to confirm higher DXY, or if the bonds start to confirm lower indices and foreign currencies, then we'll be able to adjust using that process with those different elements. But of course, again, we're not going to just jump to disregarding a higher time frame narrative. You guys that have been with me for the whole year, and you know, some of you that have been with me for 3+ years, you've been able to see how accurate we are on the higher time frame. Every single month we've had the bias correct, literally, and it's recorded, so you guys can go double check that if I'm telling the truth. And anyone in the chat, if I was lying, I would expect you to call me out. And most of you guys here in the chat right now, I've been here all year, and some of you guys for the last 3.5 years. So I'm not just saying baseless claims. For those that may be new, this really happens. This is really going on. So yeah, we'll hopefully you guys keep that in mind. So yeah, again, we're going to continue to watch this. I did say on Sunday that we want to see if this high can be taken, right? If we could react from this weekly fair value gap in the weekly bullish order block, which we are. This high to that low, as you could see, I've classified as a BPR. So if price was to get down here and invert this weekly fair value gap, that is when I would start to change my opinion. Breaking down below this and closing below the 50% puts us in line to target this, right? But unless that happens, we're just going to continue to stick to trying to see if this can go higher. That would support short-term, or that would support this being a short-term decline to then go higher. But we'll see kind of what it wants to do. Right, we have that high that was taken, and then it rejected from there. We do have SMT at these highs, which led to the market maker sell model earlier, not earlier, but yesterday. It's, you know, part of the back end premise that one of my students, well, I mean, he's like an equal, right? Byron's like an equal. He's been with me since I started. We kind of go back and forth though. But yeah, that supported the down movement, and then, you know, now we're where we're at, right? So again, we're watching this breaker here. I want to see if Asia can be swept. If it could be swept and then we get a strong displacement, maybe inverting or reusing this fair value gap once that type of phenomenon takes place. Maybe we see a deeper run to London's low here. I think that's London's low. Yeah. So we got London low. And we got London high up here, which is also a part of Asia too. We have 2 standard deviations from the central bank dealers range lower. So ICT's day trading ideas when it comes to standard deviation, power 3 projection tactics, right? We have 2 standard deviations, or I think these are half. Let me check. Yeah, so those are half standard deviations. So we're down to exactly 1 standard deviation. You see how absolutely perfect that is? I mean, these concepts are absolutely incredible. And I mean, like that's really crazy. You don't generally want to see, for manipulation, you generally don't want to see price go beyond 2 standard deviations. So basically down to here. If you're going to have a valid power 3 manipulation phase, you know, assuming that you think it's going to go higher. And the same thing for when it goes lower. If it was to rally up, we don't want to see it get beyond the 2nd standard deviation up here, right? Because this is a half. This is a 1 full standard deviation, 1.5, and then 2. Preferably, we want it to be less than 2, right? Because that means that it's pretty heavy, or pretty interested in going to the buy side. Right, so we got this fair value gap, like I said, so we'll watch and see what it wants to do in here. And yeah, let's see if we can't get price to run up above this, because these are relatively equal. And then maybe it gives a pretty strong response from this breaker in here. The likelihood of price kind of hanging around in here till NFP comes out, because it's the end of the month, I mean, that is a possibility. So if we identify that, you know, price doesn't really do much within the hour, or around like 7:30, if nothing's been done by that time and it's just been sideways, we will probably let the day go, because I don't trade PM session. It doesn't mean you can't, right? But yeah, it's kind of some of the things we're going to keep tabs on. You see these candles here? This is a 1 hour. So if you see the open price here, price rallied up, declined, so now we got bearish power 3 for now, so far throughout this hour. So we'll see how that wants to unfold. Again, I would really enjoy seeing the buy side up here get taken out. If not, and price, you know, displaces and gets too close to this low, I'll classify this as a potential market maker sell model, and then we'll basically try to target some of these lower levels. This dashed line down here, that is a daily wick, right? So it's a bunch of quadrants, right? If you guys have been watching ICT stuff or my stuff for the last, you know, couple years, we always talk about the wicks, right? It's always something you got to pay attention to. Same with the quadrants inside fair value gaps. Same with the quadrants inside regular trading hours gaps, which is something we'll look at here. Looks like there's going to be a pretty large gap to, what is it, 824. I guess there's really not much of a gap, actually. See, the regular trading hours gap is going to be tiny. So when the regular trading hours gap is super small and we're in consolidation, generally that's a signal that the condition may be a little hectic for the day. And then you add that on top of like overlapping higher time frame candles and, you know, us being at equilibrium or something like that. You know, those are all indications that the conditions may be a little rough. So I encourage you to lower your risk, okay? And, you know, we'll see how things unfold. But yeah, so the if-then scenarios make sense, hopefully, what we're looking for, what I'd ideally like to see. Again, I'd like to see it get up here, hit this, and then we'll see how price responds up there if it gets up there. And then maybe we can get price to pull back a little bit lower. Maybe even try to target something like this, London low, or just simply some of this liquidity. Yeah, then we got that fair value gap. It's a 30-minute. That's a 30-minute, and this is the 15-minute. We did take sell side. We have now shifted market structure here. If we're looking at this 15-minute chart, we may have this 15-minute framework in this fair value gap, inverting this to then try to get us up above there. You see this down movement, equal highs, consolidation. That down movement, if we go to the 5-minute chart, maybe lower. We could see this behave as a market maker buy model simply to get up into this level. And if we were to go lower later, after we sweep the high up here, that'd be a market maker buy model to take out Asia / London highs to hit the higher time frame breaker. And then maybe it sets up a market maker sell model after it does that to then put us in line with targeting potentially lower prices again. So yeah, we're just going to fill out what the open's going to do. So these are some of the things that I'm watching in price, some of the stuff that's present currently. There's no decisions to be made right now, at least for me. So yeah, we're going to be patient because of the overall landscape where we're at. So yeah, we'll see if it can open up or if it wants to stay stuck. Because it has a pretty decent likelihood of kind of being stuck, right? But again, we have our scenarios to watch. So yeah, I hope you guys have had a good week so far. Let me see. That makes sense. We'll leave on as lows. Ran previous days low early. Yeah. Yeah, sometimes that's a good thing though if it runs previous days low, previous weeks low. Early, especially early in the week if we're bullish, that is a great thing to get in line with because it could be the opposing side of a bullish power 3. So yeah, DXY is definitely pumping here, coming off this daily bullish order block. It's a 2-day bullish order block. There's a shift, so if we start respecting this and we get back above the 50% of this daily fair value gap inversion, that puts in jeopardy these relative equal highs up here. And that is obviously something that will apply downside interest in the foreign currencies or support downside interest in the foreign currencies and the indices. And of course, commodities like gold and silver as well. So yeah. You see this 4-hour? Once it takes London and Asia's high, if we do end up doing that, We definitely got to monitor how this is going to behave. It's the breaker too, like we pointed out. But as you can see, we move up to the 4 hour. That breaker on that lower time frame is also a bearish order block too. So this just shows you the overlapping effect between the PD arrays and why you really only need one to focus on and master, because a lot of times it's putting you in similar positions just at different moments in price, different opportunities. But overall, a lot of times things will be working together. And if you see overlapping PD arrays like this and there's a response, I mean, that's a highly probable, useful PD array to use. So yeah, now we're potentially going to invert this 30-minute fair value gap. So let's see if it'll leave Asia's high. DXY is really accelerating here. All right, let's see what happens here going into the open. It may rip, right, and not offer anything. So we got to make sure that we're cautious about that as well. So that fair value gap's inverting right now, or reusing it. So let's see what happens with this. This high to that low. Grade this price swing. 75%'s up here, 50%'s in here. So let's see how price treats that. This is also the overnight equilibrium too, this 50% level. If we stay above that and we displace back above this, that's a pretty good indication that we will end up targeting this up here. This along with the first 30 minutes of the overnight range from the open, casted out 30 minutes. There's a range that's created, a high and a low. I'm not sure why it doesn't show it here, the open price. But open price is here. So the first 30 minutes will be somewhere in here. Okay, so it's a pretty big range, this low to that high. So that range, if we get above that, plus stay above the first 30 minutes of the overnight, or the overnight equilibrium, that first 30 minutes, and the first presented fair value gap. If we stay above those three things, those are real-time indications that price is going to continue to go higher if we stay above it. This is a beautiful response. Let's see how it treats this. We may have a shift and something potentially unfolding here. It's too early in the session though, like you guys should know by now. I don't engage right away. I refuse to do it. It's just the way it is. I let some of the price action move. All right, so the open is now really, really, really manipulated so far. Let's take a look if this can load. Got a pretty strong cracking correlation. Let's observe the lows. Is there any SMT? No. Looks like there's going to be SMT at the highs. That was a pretty strong drop, huh? So get this. So we don't got the first 30 minutes yet. So it looks like it's going to leave Asia's high for now. So I'm not interested in taking this to the downside just yet. let's see what the wick does here. We have news at 7 and 8, right? Trump speaks at 8. But because there's news at 7 o'clock, I'm very skeptical about this here. Because they may use this as manipulation. We're still at a level on the higher time frame that could hold price and move it to the equal highs up there. But this breaker, though, if it does not want to go up there, that breaker is Y, right? And it basically will hold that level, leaving those equal highs because it's a balanced price range above us. I'm just simply trying to see if we can get up there, sweep that, and then if it wants a short from there, that's, you know, it's enough for me to have order pairing to the buy side for my sell side position. I mean, they may just use this though. You know, because the news is coming at 7, of course we're gonna let the first portion of this range unfold. You know, we haven't missed anything. Don't feel like you missed anything. You know, if you hop on these calls a lot, you see I identify so many opportunities every day. Even when price moves like this, if you think you miss something, you're going to miss something. Right? So, I mean, there's an argument here for the short, right? But again, it's outside of my personal rules. But if you personally don't have that same rule where you don't take a trade at the 30-minute mark or the open price, like too close to it, if you're cool with taking trades at the open or right next to it, and your model shows up, don't let me pull you away from that. I'm just showcasing obviously what I do. And, you know, I'm not concerned about not participating in something that's cracked in correlation. It's right at the open, right? It's just something I don't concern myself with. But, you know, you can't lie, that was a good move, right? It did sweep out sell side here. So very dynamic delivery at this current time. Massive crack in correlation. We now have SMT at the highs. So we'll see what happens going into the macro that comes out. Yeah, wow, I didn't think it was going to be that aggressive. Holy crap. It's targeting London's low like we talked about could be the case. I mean, that was the target I wanted entirely. But I wanted this to be taken first. But, you know, can't get what you want all the time, right? But yeah, we'll see what price wants to do now. And see if we can continue to support downside. Maybe, hopefully DXY can run higher. And hopefully this at the same time, if it is going to continue going lower, hopefully this can get the correlation back in line. I don't like trading cracked markets with correlation being a problem. That's the first sign of high probability, is if the markets are symmetrical. So put that in your list of identifying high probability and low probability. By the end of the year, if you do keep tabs on these things and hop on the calls, you'll eventually have a list fairly quickly in terms of how to classify high probability, low probability, along with many other things, obviously. Go look at the chat. Yeah, regular trading hours gap was very minuscule. Generally, based on what ICT has taught, when there's a tiny regular trading hours gap like that, again, it leads to nothing like this, right? It generally tends to keep price, you know, moving pretty crappy, I guess you could say. Not all the time, obviously. But if you back test it, you'll see that, you know, when the regular trading hours gap is super small, it doesn't generally provide anything like really favorable until a little bit later, obviously. You know, potentially it could set up something, but early on, you know, doesn't really use it or do much. So yeah, let's see what happens here with this decline. It's a pretty strong decline. If there was no news at 7 o'clock, I would be very confident in taking this as a short. and like trusting that it probably won't come back. But because there's news at 7, because the higher time frame is what it is, because DXY is still falling here, still has a likelihood of being aggressively pushed to the downside. We've inverted this fair value gap on the daily. All that stuff makes me not trust things too much until I see a little bit more evidence, especially if I'm outside of a macro. You know, the timing elements are extremely important. When you get on the chart and you're like, a little bit uncertain about what it's truly going to do, you want to make sure, you should make sure all the time that you're in a macro, right? Following the time elements, but especially in times where, you know, you're not entirely sure. You know, it's very important because everything's based on time. You know, so yeah, again, just like how I said here, how this was something I wouldn't take because of the time element, same thing occurs here, right? It's still a fair value gap. If this is something that you like to engage or makes sense to you, don't let me take you away from that. That was a beautiful move. It's just not something I personally would like to participate in. That was 30 points right there. You know, if you took a trade and you made money already, or had a successful demo trade, or whatever, whatever you're doing, do not take another trade. You know, matter of fact, if you think you can't not take a trade and you already took one and it was successful, you know, if you can't have strong enough discipline and not take a trade, I don't even advise you to stay on the call. You know, you got to force it upon yourself to be disciplined. You know, but if you can, you know, I'm grateful to have you guys here, and there's going to be a lot of stuff we'll discuss, obviously. But yeah, so we've got this wick here. Let's watch that. This low to that high. It's going to be an order block. Everything is declining here, so it's pretty interesting. Gold is cracked, right? It's giving a rally. Maybe we get back in line. Look at the Dow. The Dow's being pretty aggressive back to the buy side. So yeah, we'll see what it wants to do going into the macro. 645-ish. You know, I'll wait for that. We have definitely blown out the liquidity pool that I wanted to use as my target today. It didn't offer the run higher that I wanted to see it do. It went very quick and then just rejected the fair value gap. You know, this technically is a run on stops, shift in market structure, fair value gap. So this is the YouTube model. Again, part of my rules personally for me, I don't engage this early into the open. I just don't. Based on the data that I've had, you know, it's unnecessary losses take place. And so because of that, to stop or not allow that to happen in any way, based on that certain scenario, I just decide to completely not take the trade. I do sometimes, right? I do sometimes engage those scenarios, like things like this, because the model's clearly there. But for the most part, you know, if I was looking for price to come up here first, then go, and it just opens up and does what it just did, you know, that's more reason why I wouldn't take the trade. Right? So here, let me actually pull this up so we have a higher time frame and the lower time frame. So yeah, I'm gonna watch this. Right, and if DXY if it continues to decline like this and it breaks through this level, shows respect to these upper levels, and we continue to see this aggression to the buy side. We do have SMT at these lows here right now. You can also make the argument that there's, you know, SMT at the highs too. When you have two SMTs, you got to use DXY. So if DXY is declining, right, if it continues to march lower, it's going to be more likely that the bullish SMT eventually is going to manifest higher prices. But again, we're in a state of observation here until the time elements can arrive on time. So yeah, we got this low here. Again, there's SMT. Let's see the behavior here, what it's going to want to do. Yeah, that is definitely a very aggressive repricing lower. So if it is going to go lower, this low to that high, the middle portion of that range should not even be attempted, right? This is an order block too, so it's another reason why price, if it's going to go lower, should not spend too much time up here. If it does get up here, that's, you know, that's great and all. Maybe that sets up a counter or like a buy position in that instance off the SMT. But once it gets up here, this is going to be a very heavy deciding factor whether it's going to continue and target these highs up here if it closes above the 50%. Otherwise, we may continue to just keep going lower. So again, I'm in a state of observation here. Initially, what I wanted to see happen, price going up above this first, then going, didn't happen. That may be giving us a sign that we are overwhelmingly bearish. Right? We're just going to have to see because there's news is coming out. So because of that, I'm going to wait till the news, till that 650 macro, and then see what price can offer beyond that point. Yeah, this displacement is heavy. It's going to need to really displace if it's going to go higher. Otherwise, it'll keep sliding to the downside. See the bearish power 3 here on the hourly for the 6 o'clock hour. Rallied up. Open, rallied up. Declined. So we got bearish power 3 for the hour so far. And we had a bullish power 3 here for the previous hour. Consolidation, manipulation, and then distribution. Capping that, right, with this retracement. And then it started the 6 o'clock hour. Consolidation, manipulation, and then distribution so far. Got a fair value gap in here. This wick, if it gets above that wick, we want to watch how it treats it when it trades back into it. Remember, these dashed lines are a higher time frame daily wick, and it's the quadrants. Okay. Remember, weekly chart is still bullish, right? This has been a pretty aggressive decline. These equal highs up here are definitely something I still have my eyes on. So yeah, this high to that low, there's a gap in there, but we still got buy side and sell side offered in there. This high to that low, 50% of that needs to not get violated. If it does, we'll continue to drop. Otherwise, if this continues, this will be a change in the state, and then to target the Asia high up there, which is something I'd really like to see right now. Let's see. Let's see if we can get that. See if we can't get that to move. Overlapping fair value gap in here, that if it's going to go higher, it should respect this as a BPR. If it was to get back down below that, again, it's going to probably look to target the 50% of this. Breaks past that, it's going to continue to drop. DXY is really accelerating to the downside here. See if we can't get this to respect that. Strong sell side sweep. And again, there is a chance for us to be stuck in a range and sloppy, you know, just simply because of the time of the month, right, and the time of the year that we're in, and what we've kind of came off of. So yeah, it looks like we're gonna potentially have a scenario where the Nasdaq is the sixth sister. Hopefully not, because if it is, I talked about this with my private group. Every time the damn sixth sister approach happens, it happens within the Nasdaq. I can't even remember a time when it wasn't the Nasdaq that ended up being the slow mover, or the one that ended up doing something completely against what the other three are doing. Generally, it generally happens with the Dow, but for some reason, as of recently, the Nasdaq has been a very heavy problem when it comes to this type of intermarket relationship. So yeah, let's watch what it does here. Remember, it's going to have to treat this fair value gap with respect, right? It's going to have to close above it. It is doing that right now, so we'll keep monitoring that. See if we can't get up there to that Asia high. We do got SMT on both sides, so again, we're in a very high risk environment right now. So see this as a potential market maker buy model. Again, like I said earlier on that higher time frame, if it fails and then breaks down below these levels, there's no reason to look for buys in that instance, right? It's very objective way of doing your analysis and these different tools, because they help you be flexible, right? And if it fails, then obviously you could try to target further sell side. I mean, that really blew that out pretty aggressively. And then we got all this that it may look to trade into. So let's see what happens. The open price is up here. So we spent a lot of time below the open price today. And of course, it's been pretty aggressive trading against the buy side delivery. So, and we are definitely in the closing portion of the monthly range. So kind of like caps the monthly range. All right, so now we're digging pretty aggressively into that. So yeah, because that failed, we would need another displacement, right? It's going to have to stay above this high to that low, the mid portion. It's a very aggressive retracement there. Back to the 50% of that higher time frame wick. DXY is smashing lower. Right, it looks like a complete mess right now ahead of the news. So yeah, let's see if we can get back above this. If not, again, buys are not trustworthy right now whatsoever. It's too sporadic. So let's see what the news does. Because there's news coming at 7 and we dropped aggressively to open, sells are not very trustworthy to me. They may work out, but just given what I use to trust my setups, it's just not in line with something I'm comfortable with. But yeah, so we're punching into that midpoint, like I said, right? So failure to launch from this takes us away from trying to buy, unless we were to get back above that once more and then use it as an inversion. That would set the stage for us to throw another attempt in to try to find an opportunity. Try to target those highs. But yeah, everything right now is favoring downside. Right, and if it trades back into this, maybe it uses it as an inversion. Right, but I'm gonna just wait for the news. DXY is definitely punishing sell side here. The yields are supportive of downside in the DXY here, But this going lower generally will send the indices higher because that's just the relationship they have. So all this stuff being conflicting right now, again, low probability condition, high risk. So with that being the case, you have to have your risk cut. You should not be risking a lot. So yeah, we'll sit on our hands and see what it wants to do going into the news. We're in the 650 macro. Sell side's been delivered going into that macro. Again, there still is reason for us to believe that we may look to try to target those equal highs up here. You know, if not, the deeper it drives into the sell side, the more it's invalidating this market maker buy model. And again, that'll potentially lead to an even deeper run to the sell side. But yeah, we'll see. We'll see how things transpire going into the news. That's what I'll be waiting for. I started watching your videos recently, and I have learned a lot. Paulos, I appreciate your support. Appreciate your interest in the content. I definitely try my best to get you guys applicable, like instantly applicable information. I try to make it as like less complex than I possibly can. All right, so hopefully I've been able to do a good job at that. I'm glad you've learned a lot recently, and appreciate you guys. Let me see. Supreme said 928 new week opening gap. Yeah, the new week opening gap right here. It's very tiny. It doesn't really have much of a gap per se. It definitely does have the open there though. You know, so this big rally, high set on Monday, declined going into Tuesday, right? Or going into today. So we'll see what it wants to do here. It's really, really aggressive to the downside. So buys are definitely not going to be considered for me right now. Pretty much nothing is going to be considered for me right now because of what we've been talking about. And it's just kind of the way it is. Again, if you found something that made sense to the downside and that was your opinion, again, I'm here to give you my advice, right? My opinion, you know, and how I'm choosing to do things and how I'm making some of my decisions or not making my decisions, right? And why. And, you know, you're going to use what you're going to use and disregard what you're not going to use. But if you took a short, there's nothing wrong with that just because I didn't say take a short. You know, I can identify reasons that you could have participated. And then again, like I said, if it broke down below that fair value gap, where the hell is... See, if it broke down below this fair value gap and closed below this, I said that it was most likely going to take out deeper sell side. Within the context of that, there's a wick here, there's a fair value gap in here, run on stops, shift in market structure here too. So maybe that was something you looked at, right? The volume imbalance, right? The wick, inversion, fair value gap. Those are all reasons you could have justified after we saw the invalidation of the levels I just talked about. That's a way you could have justified this as a potential execution, simply to target the low down here. But if none of that fits your model, you know, don't fool yourself into thinking that, oh, that's something you would have been able to take or you should have taken. Again, you have to have a model. You know, you have to have that one thing you're looking at. And anything extra, it should be just that, extra, you know. But your main model has to be on your mind. Because if you have too many things going on, you're going to have analysis paralysis. And that's going to be a problem. So yeah, I'm not entirely sure, if I'm being honest, if we're going to dig deeper. I mean, the relationships here, there's really nothing providing like a lot of clarity. The bonds and yields show that we should have downside DXY bullish indices. Maybe that kicks in eventually. I wouldn't be surprised if this entire decline in here was a fake move to go and punish and dig deeper into the discount price levels to then pair up smart money buys with willing short positions at these lower prices. It has been a massive bearish candle. So now DXY is rebounding. Again, we are inside of this, right? This bullish PD array in here. And you could say the same thing for the indices, right? We're inside of a bullish order block. Also a 4-hour breaker, bullish. And fair value gap in here too. There's a shift right here. So we can be absolutely 100% confident, higher time frame wise, that it's going to continue being bullish and sells would be off the table once we displace from that and get above this. Because then that'll be a run on stops, shift in market structure, higher time frame PD array reacting higher in price. And then this could end up setting up like a YouTube model, but on the 4-hour, right? And continue this market maker buy model. So these are reasons why I'm not taking a short right now, because my narrative has not changed. So hopefully you guys understand that, and understand, you know, how you can use that in your perspective, because it's very objective. This is why I'm not taking a trade to the downside. That's why I didn't feel taking any of this has been something applicable for me right now. We got SMT at the lows. We now have a shift in market structure. We're ahead of the news. So we'll see what happens in here. 7 o'clock's about to come. We did shift now back to the buy side. That fair value gap that I highlighted earlier, it's actually the first presented fair value gap here. So if it can get above that again, that'll be potentially an opportunity. Changing the state of delivery in here. If it was to go lower again after all this, it's definitely not worth even participating. Because it would be clearly a high resistance delivery. This should be a breaker here. Got the wick in there. Maybe it doesn't come back down into it. I prefer to see it go back down into that. Okay, so now we're above that first presented fair value gap. And the news just came out, so let's see what damage that does. So DXY is really accelerating. So this is a nasty price delivery overall. You know, if we're going to open up, I'd ideally want to see it open up from here to target these equal highs up here. So yeah, we'll see if we can get that to unfold. Still got SMT at the highs. And we're still reacting off that lower levels, or the lower levels I talked about earlier. So let's see if we can't get something to move here. Seeking the buy side. We're inside the 650 macro. Timing wise, this is ideally what I would like to consider engaging around. Right, and you could see waiting, right? If this does end up going up here, you could see that waiting absolutely does not make you miss anything. You know, opens up the door to find a better opportunity, one of the real more like meaningful opportunities within the daily range. See, again, there's that fair value gap. Whoa, what the hell is that? low formed at 6. Pretty nice reaction here. Was that already 30 points? 27. 27 was offered so far. So it looks like power 3. This whole thing was manipulation. Like I told you guys, the first start, this is why I was waiting. Look how fast it's moving, because everybody tried to short, but not us. You simply want to look over the 2022 stuff just to get a baseline understanding of things and get a model that you can use and follow along with, because I'm always talking about a couple different models, but the YouTube model is definitely part of my operations, so YouTube model would be good for you to dig into and then watch that until it makes complete sense to you. This high getting traded through should be able to leave a breaker, by the way. And if you have any questions, bro, I'm more than happy to help. The more you hop on, obviously you'll get better and better, and things will make more and more sense. You know, there's not going to be like one concept I talk about and you're just going to be able to go out there and, you know, crush it. I mean, it's just not the way it is. If you're new, I just wanted to make sure you know that. Becoming efficient at trading requires a large pool of skill sets, mindset management, and then all the technicals, right? Realistic expectations, you know, all kinds of things that people don't realize when they first get started. And there's no one concept that's going to allow you to flourish. You know, there may be one model that makes perfect sense to you, but, you know, it's going to be a process. See, so with this doing what it's done here, depending on how this reacts below that low, probably not going to be interested. That just took me out of break even right there. We'll see if that was too aggressive. Maybe it was. But yeah, you know, it's going to be a large list of things that you're going to have to master to be a good trader. So yeah, that's not necessarily something we want to see. If it's just a wick, great, right? If it closes back above. Once we close below this first presented fair value gap, that becomes a problem. So yeah, it's already kind of leaning towards it being a problem. Yeah, it's one of those days. So yeah, stopped out, break even on that one. I would take that trade 100 times over. Just, it is what it is. See, like I said, if it was to take this high out, and drop down, we're in high resistance. So yeah, with that being said, we're gonna monitor what's going to happen here. We're not going to push too aggressively in this. So it's denied the ability to get up to this level a couple of times now. So, you know, and then we see this nasty price delivery. Everybody's getting stopped out. If you shorted, you got stopped out. If you bought, like we did a second ago here, it came too deeply into it. We are back to the change in state of delivery down here, though. These lines, again, maybe it seems a little bit busy in here, but it is higher time frame quadrant levels on a large wick. So we're trying to monitor how it's going to hold and utilize it as support. If not, right, and it drops, it's obviously going to use it as resistance. You know, let's hide that formed here. Got SMT at that high. So yeah, it's starting to seem more and more like this breaker is going to hold and keep pushing it. The problem is we're between this breaker, right? This higher time frame decline and the 4-hour bullish breaker and the higher time frame bullish order block and the market maker buy model. So we're kind of stuck in between those ideas. You know, and then of course we see the price action acting like a lunatic, right? So with these things conflicting, it's just one of those scenarios where I'm not unsure. I'm not fully sure if we're going to get up here. But what I wanted was up here. We'll see if we get there later. I don't trust a short, especially with the Kraken correlation and DXY just absolutely crushing the sell side here. You know, let alone the Kraken correlation between these three. Seems like they're getting back in line somewhat, but it's just there's too many conflicting things for me to engage something and think it's high probability because it's not. Let me see. Yeah, it's a bit busy today. That's for sure. It's a bit busy today. A lot of this stuff was also from when I was talking to my mentorship students. Kind of just left it on. Sorry about that. And then this was from this week, right? Just showing what it reacted from. Kind of keeping stuff on there just as a reminder from Sunday too. We did a lot of the analysis, and a lot of times people forget. And then I got to go back and I got to put it back on and re-explain it, and it's very annoying. So sometimes it's going to be a little busy. Not all the time. So do you guys have any questions about anything? But yeah, again, I'm not interested in really looking for anything at this moment. London's low is taken. The whole scenario we basically were working off of to try to catch this buy in here was the first presented fair value gap, the fact that this was potentially manipulation. We're below the open price. There's relative equal highs up here in Asia and London. It does seem like that breaker is becoming more and more important. It's holding pretty aggressively, not allowed to go up there. You know, we'll see if this change in state of delivery can still hold. We may just be, you know, stalling out, you know, but that manipulation was what we were anticipating. Price manipulating deep, not too deep. I didn't want it to go this deep, but it ended up targeting the low. Asia was either going to be targeted and then price was going to drop, or this scenario was going to happen where it was going to drop and then possibly go higher. I'm not sure. I'm not 100% sure if we're going to be able to get that run higher given what we've seen, how unwilling it's been to want to go up there, and how we got back down below these levels here, the first presented fair value gap. And it's just, you know, kind of failed to really try to get up there. But Asia was going to be something important for me today. Asia and London's low. But I was going to use Asia to target London's low. Instead, it opened up, dropped aggressively, which is it is an indication that we are pretty heavy, pretty interested in dropping. But you weren't able to use intermarket relationships this morning like we always do to really cement that trust behind that opinion to target the sell side. it refused to give us any in the moment clear intermarket relationships to go off of. And then of course you see this massive back and forth nonsensical delivery. Scalps obviously from like this level here when I pointed out that price getting above here to target this on our way to target Asia. Obviously that was a setup, right? That was something in line with what I wanted. Of course I moved things to aggressively have my stop. Luckily I did and didn't take the full loss, but it ended up turning around and coming all the way down to here now, right? So right, we started the day with low expectations, like I said, the likelihood of price being stuck, that's come to fruition. So that intuition and anticipation of the condition clearly has been present. We have the PD arrays down here on that higher time frame, the 4-hour breaker, the 8-hour order block, and the 4-hour breaker. Price is just hanging around that. So and DXY is declining, and the higher time frame bullishness has not been turned off. So with that being said, at any moment they could flip the switch, and this can end up racing to Asia's high, right? If they did want to decide to go up there, because that's a risk, and we're not seeing enough confirmation to support downside in terms of intermarket relationships and some of the other things we use to justify a narrative. I'm not confident in taking a short. So these are the reasons why, and some of the things going through my head right now, and why I'm not trying to take a short. Obviously there's been short opportunities, and again, if your model fit something in here that was a short, don't let me take away from that, but you do want to make sure you consider the things that I've just been talking about, right? Because it's conditional awareness, right? Conditional understanding, and maybe it can be helpful to you so you can know when to lower your risk. Because if anything, all this stuff that I'm talking about today has helped assist you in knowing how to calibrate your risk, normal size or half size, or just cut it down a little bit, right? So yeah. Very crazy price delivery this morning. Yeah, this is that breaker here. It's that 8-hour order block. It's a daily too. Yeah, daily order block too. And yeah, we're kind of just stuck inside the range. We're hanging around a bit of a premium. Go from this low to that high. We are inside of a premium. We have not broken structure enough to think that we're overwhelmingly going to go to the downside. All right. So that's why I'm not interested. Now we're coming back to the first presented fair value gap. You could see how important it is to continue to reference these daily wick levels. Look at how reactive they are. If you don't have them, even though it makes it a little busy at times, you're not going to be able to be aware of it. There's too many things to keep tabs on. You know, and this is in close proximity, so that's why it's important to have it. We can remove this. This fair value gap's not really in the way. This is a wick too. It's a high of a wick. But yeah, we're still inside this, so we can keep it that way. So yeah, we may get our turn. We may get our turn to the buy side here. Still, it's very, very unreliable. Very nasty. But yeah, if it's going to bounce, it should bounce from here, from this fair value gap. But look at DXY. It's not, if it was continuing to drop, it'd be a little more reliable. But I mean, this is just nasty price action. Engaging in this, you don't know. Nobody knows if it's going to displace. It could just hang around in here. This is the last day of the month. So this is to be expected on the last day. On the last week, it's either going to reject and go against you, or it's going to be stuck in consolidation like this. You know, and that crack and correlation, like I said, when you see that, it's low probability. Doesn't mean there won't be opportunities, right? There was some shorts you could have taken, depending on your model. And the buy I called out ran 40 points, right? I said should move from there, and it ran up above there. That's 40 points. You know, this is an instant where I should have taken the 40 points and not let it come back. 20 to 30 points. I'm telling you, it's the difference between a profitable day and a day where you're break even or you take a loss. Right? Today is a beautiful example of that. I mean, where was the opportunity I pointed out? It's right up in here, or right up in here. Right? Because it shifted. DXY was falling at that time. Here. And the objective I wanted to see was up here because they're relatively equal. Very nice. But it just refused to really do anything meaningful to that direction. So, you know, it's one of those days, and not too concerned about it. Yeah, this could still end up being a breaker on this time frame. The breaker's this entire candle. So technically it's still moving within it. This high to that low. All right, this is how you grade a price swing. So buy stop's taken here, sell stop's taken here. This is the parent price swing of this small price action. Obviously it's inside the larger range as well. But in this specific little range in here, we have 25, 50, 75, and then the high. These levels in here can be responsive, right? Like this was, right? The 25%, and then the 50%, right? If it could bounce from that, right? That'd be great. We have the first presented fair value gap in here too. And then 75% as well. You want to observe the reaction, right? It should be able to present something reasonable if it is going to go higher. This concept is used on the higher time frame as well. You could have a daily perspective where you're taking the high of a daily on the daily chart down to the extreme low on the daily chart. Right, like let's do an example. Like this, for example. This high to this low. 25%, 50%, beautiful reaction here at the low. 75%. So these are levels that you can anticipate responses happening from. And then of course you couple PD arrays, the day of the week, right? You know, maybe other levels that are in line with that, like this wick in here. It's definitely smashing around that. Here, I can actually remove the breaker now because it dug pretty deep into the order block. I could just keep the order block there. Ooh. So you see why I'm not trying to take a short? Me telling you guys not to take a short, or that I'm not taking a short, has paid off. You more than likely would have taken a loss. You know, because unless you're taking 20 to 30 points. If that's the case, and you know you were offered many setups. Many. Same with the buy, right? Maybe not many, but there was at least one. Even though it's a pretty disgusting environment, really nasty. See, I'm not interested in doing anything. Sorry about that, but it's just kind of the way it is. You have to know when to push, pick your battles wisely. And this is not a battle I'm willing to put any soldiers in. Yeah, it's probably going to be very crazy. By that time, we'll be off. We'll close it around 7:45, depending on what we see. That's another one. Oh, that's this wick up here. It's a bit off. I don't know what the hell. Got that wick too. Yeah, I'm really focused on this. Focused on this, right? The order block on the 8-hour, order block on the daily. We're trapped between this bearish order block and this bullish order block, and it's just inside day. Did we take that out? The low is 24/7, 22. Yeah, no. So this low didn't even breach this previous low here. So it's an inside day. Small regular trading hours gap, overlapping delivery. The end of the month, ahead of NFP on NFP week, inside day, cracks in correlation. All of that stuff that I just mentioned right there are ways to identify low probability, high resistance, or anticipate it, or to expect it. No news days, that's also another one. Right, so you want to take what I just said, rewind the video, and write it out as a list, because most people don't have a list of things like that, like keeping it that simple. You know, most people don't know how to identify low probability or high probability. They don't even know they don't know, you know, how to identify either. So their risk is the same all the time, and they don't have a plan to mitigate risk when things are less favorable. They don't know how to anticipate when it's less favorable, right? Just that little small list I just gave you, you know, that'll tell you whether something's favorable or not. You know, you can keep it as simple as that. Obviously, you gotta have the list and then watch price, right? So yeah. So yeah, there's nothing I'm interested in. And this will probably continue. So just one of those days. I would hold your gunfire. I would not touch it. It's a rattlesnake. Yeah, if you haven't done something already, especially with Trump speaking in 30 minutes, you really want to get ahead of something he says? I wouldn't. You could talk about the sun being out today, and they'll use it as an excuse. They use everything he says as an excuse to do whatever they want. Or complain or whatever else they want to do. Yeah, you see how this has worked, this fair value gap? Just back and forth, back and forth. You know, it's just kind of stuck. So you guys have any questions? Hopefully you guys were safe today. Because if you were going to take a loss this week, today would absolutely have been one of those. Yeah, let me know in the chat if you guys have any questions about anything. Alright, look, now we're starting to open up a bit. Man, maybe they're going to use Trump's speech and all this pre-price action to then finally go up and get to the target I've been wanting to see. Yeah. Yeah, let's see what happens on the next macro. Hey, Byron. See that low? Think about what we talked about yesterday. Very interesting. So yeah, now we're back above this, so we may finally have enough interest to finally get up there. So again, this whole decline I haven't seen as like something that's gonna really get us down to even deeper. That's why I haven't marked off anything below that 4-hour or 8-hour order block or daily order block. We've kind of just been dancing around in there. Look at the quadrant levels respecting. So yeah, if it's going to go higher, it's going to have to do it like really soon. Otherwise, it's just going to stay in this range until Trump speaks. Trump may be the reason they're going to use to get price up to these highs here. If you go to the 30-second chart, it should say, oh, because you're using US 100 or the NAS 100. You got to get the futures contracts, bro. Get the futures data. I seen that I seen that yesterday. You got to get the futures data, Byron. There's little discrepancies with CFDs. The gaps in certain highs and lows. I think it's like $7 a month on TradingView. It's not too bad. You could pay a little bit more and get gold and all the other stuff too if you want. So yeah, we're gonna have to stay above this first presented fair value gap if it's going to or if we're gonna want to have anything reliable to the buy side here from this level. We need to see it stay above that. This low should not get taken out. So yeah, this should be able to push us up from this area. Yeah, now gold's running higher. Yeah, we may have just held price in here for this long to kind of stir people up. I would not at all be surprised if they use Trump as the reason to then push higher. Yeah, so now we're below that first presented fair value gap. Again, that was going to be something I was monitoring. Now with this, I'm again not at all interested unless it wicks up or just creates this as a wick and we can get back above. We have relative equal highs here. If we can't stay above this, I literally have no interest in anything we see in here. It's trash. Trump will probably, again, be used to get us up to these equal highs. Right? That is the most obvious relative equal highs or lows. We also have, we actually got relative equal lows here too. So that's interesting. It's interesting. But again, these being taken is supported by what DXY is doing. But yeah, see there's a massive crack in correlation. Next macro will make us shoot. Hopefully, what we see here, I don't have a lot of faith in what it's going to do going into the Trump speech, whatever he's going to talk about. Especially how we're not really respecting certain levels. I mean, it's just, we're literally stuck in this range here. It's just nasty. It's seek and destroy, right? Displaced, took London's low, and now we're in seek and destroy. Just really using these quadrants in that daily wick and just not really moving, going anywhere. It's just stuck. Yeah, see? Turned it off. It's definitely trying to punish anybody that was trying to continue to buy the all-time highs or try to chase that rally that attempted to breach the all-time highs. I mean, we've been so bullish for so long this year. And now we ended this month after it was pretty one-sided all month to the buy side. And now they're, you know, literally capping the monthly candle. You know, like if we go to the monthly time frame, you could see what they've decided to do. Right? First week of the month generally creates the wick, which we saw that if you go back and look. Second and third week generally pushes price. Sometimes it'll make the all-time high or the high for the month. And then the last week, or sometimes towards the end of the third week, but for surely, for the most part, the last week, will end up creating the wick, right? It'll start pulling against it to close the candle. The same thing happens on every single candle, every single month. Sometimes it's bearish, sometimes it's bullish. But that phenomenon, that power 3 phenomenon, happens on every time frame, from the 1 hour to the yearly perspective. So you always, for those of you that may be new, right, or wondering what you should really, really focus on as much as you possibly can, you need to pay attention to power 3. Because it's literally the logic that's used to create candles. It's the logic used to navigate a daily range, a weekly, monthly, hourly range, right? Everything else stacks on top of that basic foundational understanding. It also helps you anticipate, because then you could start phasing out, like, or putting things in phases, right? And then you add market maker models and it gets even more advanced. You know, because power 3 and market maker models a lot of times kind of layer on top of one another. So yeah, I have a series, for those of you that may not know or maybe new. I have a series where I talk about power 3. I talk about power 3 literally every single day. Like literally. It's always there. So yeah, we got this order block, like I said. You could see how price is basically wicked into that order block. We got this wick here, right? So we'll see how that wants to behave. But yeah, from this low to that high, if price is going to go lower, we do not or would not want to see price spend too much time above equilibrium of that range. So yeah, that SMT here at these highs makes me think that it's unlikely that they'll try to get up here. You know, we'll see. You know, it's pretty much why it's had such a hard time even trying to attempt to get up there, and every attempt has been denied. You know, if it does look to go lower, you know, you want to keep your eyes on these equal lows that were set earlier. You know, maybe it gets down there. Again, I'm not too sure what the likelihood is of it getting down there. We'll see what Trump says. Again, he may be used to get us down into that level. But you got to remember that we're inside of a daily bullish order block. Right, so this is where that's at, right? So that'd be pretty deep into the order block there on the daily. And if this was to violate the 50% of this order block, buys are completely off the table. And then we'll look to try to target things like this wick, the low, this low, so on and so forth. But you know, the higher time frame takes time. It takes a long time to do things, so you have to be patient. And when you know that conditions are not ideal, in order for you to be around when they are ideal, you need to be able to control yourself during the times where it's not delivering that great. Clean that up a little bit. This was on the 1 hour, yeah. It's just nasty. Ugh. Definitely making this whole area and price extremely efficient, and it's wrecking people, I'm sure. And then eventually, all of a sudden, it's just going to skyrocket if it does go up. If it does target these highs, it's going to be very quick after it spent all this time and probably allow nobody an opportunity. Maybe it does it here. 7:45, it's, you know, 5 minutes before the macro. It's definitely time where it could, you know, reasonably be used to go up there. Still within the breaker. Definitely work the breaker a little bit too deep. All right, put that right there. Shift in market structure, run on stops. Pretty decent response. This high here, move up in time frames. This looks like it's going to be a breaker. That's inside this one here. If it gets above that, should be able to react here. Again, this orange line here is a 1 hour bearish order block. So it's kind of been traded into multiple times and rejected. There's been a pretty strong rebound, huh, across the board. That's pretty nice. See, I said once it gets up there, or if it's going to move very quick. Why? Because they held people in here. People are trapped. They're stuck. You know, and look what it's doing. It's just ripping their face off because it took time, and then eventually has now targeted Asia's high. We're above the regular trading hours gap. We're above that 30-minute fair value gap. So let's see if it can't blow out that Asia high right here. I didn't give up on the Asia high even through all this, like I've been saying. And I said that if it once it breaks out, it's going to break out very quick. And has it done that? Yes. Did I participate? No. Right? Because look at, I would have expected this to happen after Trump comes out. This kind of makes me suspicious. Is Trump going to come out, and then are they going to use that to tank? Right? Who knows? You know, but Asia's high, that's literally all I'm looking for. Once it hits that, I'm not concerned about anything else. Yeah, let's see if we can't hold this regular trading hours gap. See that first presented fair value gap? Ended up holding pretty nicely. Then we had that very fast move away. Yeah, we need to see this not come too deep into this. I'd like to see part of that left open. We already got some trading here, overlap with the gap. So we'll see if it can keep this move running to the Asia high. So yeah. Possibly. It's a bit hectic today, so, and we're kind of stuck. It's been very back and forth. Buy side delivery has been favored. Why? Continuously. Why? Because all the things that we've talked about. You know, it's been one of those days that it's been hard to find an opportunity that's been reliable, that wasn't stopped out, which is why our frequency is generally always only 2 trades, no more or less, sometimes less. Because, you know, you got to put a cap on it. There are days that are going to be like this, where it's going to be a shit show. Okay. And so you got to be able to protect yourself. All right, but that absolutely was a pretty nice run. Let's watch what this is going to do here. I'm not sure how much I trust this, but I mean, this could be one of the moves that gets us up to the Asia high. And we've been holding on to the buy side potential because of this framework here. retracement to external range liquidity up here. So we'll see if we can get that to go. We're in the 750 macro, so hopefully it could run up there. Pretty nasty cracking correlation still. But those equal highs are absolutely ripe for the picking, that's for sure. Look how nasty the S&P was. Ugh. I didn't even notice how horrible the S&P looked. Nasdaq didn't really look much better. Definitely more opportunities were arrived at here in the Nasdaq. Again, it seems like the Dow was more clean than all of them, which is very, very weird. Very weird. Yeah, it's definitely an interesting response ahead of his announcement. I know we got this 1 hour order block here. Asia's highs being targeted. Well, target that we initially started off with, I just wanted this to be a little earlier, but they made us wait for it. Yeah, like I said, this here was something to consider too. Right, I wasn't sure how probable that was going to be, but if anything, if it was going to go, it was going to go from there. So, like I said, there was opportunity. Shorts, I was not interested in, and you could see why I was not interested in it. The overall target I called out as one of the main targets, the first one that I really wanted to see, which held up all the way till right now. I wanted to see it attempt to get up there, see if it could get up there. All of this clearly was manipulation to this point. It literally traded for 2 hours against that objective just to eventually get over there. This was all time distortion in here for literally an hour, almost a full hour. No, a whole entire hour of just sideways price delivery. Was there an opportunity? Yeah, we called this buy in here. Right? Did any of you guys take that? Maybe, maybe not. Did any of you guys take shorts? Maybe, maybe not. But today's condition is the exact condition that'll rip your face off. If you don't know what you're doing, if you don't have self-control, if you don't have someone to explain certain things to you if you're brand new, this is a beautiful day for you to really hurt yourself for no reason when you could just relax. I said that if it was going to rip up there at some point and break out of this, it's going to do it very quick, right? And you could see that it did that right here. Go to the 30-second chart, you see a YouTube model, run on stops, shift in market structure, 5 minutes before the macro, which is pretty much the macro, 7:45. You could see that it offered the YouTube model in here too, right? So YouTube model buy there, YouTube model buy here, run on stops, shift in market structure. I wanted this to happen here, right? That was the first move I took. And of course it came back and stopped me out at break even. Right? And then price ran up here. YouTube model in there. Secondary opportunity. Like I said, I wasn't sure how high probability it would be, but if it is going to go, it would have been here. And then that would be used to target the highs. And that's coming to fruition. Again, all of this, me holding on to my bullish narrative, as you saw me do all day today, which is something that probably most people were not focused on because they probably took an entry and got their ass kicked, and they're not, like, that's their focus, is to take signals, which, you're not going to be able to achieve here, just for future reference. I call signals, but you have to be a diligent student paying attention to be able to take those signals, right? But there was some stuff that occurred today, but it really depends. Today's a good day for you to think, I'm not going to take a trade, right? But there was this one here. I mean, you could have thought about this in terms of the YouTube model, for those of you that trade the YouTube model. The breaker, right? This breaker in here, this high, low, higher high, right? That's a shift. Notice that shift continued. But the higher time frame, 4 hour, daily, overall perspective, that's why I held on to price going higher, right? Look at the fair value gap in here with the order block. If this was the 5 minute, would you think short? I hope you'd say no, because there's nothing in here other than your opinion, thinking that, it's already been going up, so it should go lower. And that's hope. Hope is not a strategy. It's not a strategy at all, right? And my conviction to hold on to the narrative, me telling you guys that bias and narrative doesn't change a lot. Bias sometimes does because of retracements and consolidation. But sticking to the narrative, even in the face of something like this, I was still able to continue to be on the side of buy-side delivery. I have no sell-side targets that we were talking about. I didn't mention, let's target this sell-side liquidity pool. I've been only looking for buys. I said there's things that just didn't align, and because of my opinion, I was not about to take a short simply because of the higher time frame not supporting the downside. And downside would be short-lived. Does that mean you can't take a trade to the downside if you're bullish on the higher time frame? No. But you have to understand what you're selling into if you're going to short in a bullish delivery or buying in a sell-off. That should be classified as retracement. And if it's selling into something that's going to be bullish, you have to know what it's shorting into. And then once it gets there, you have to know that it gets there. So you don't hold the trade thinking it's going to target this low just because you may have caught the high or a big portion of it. So there's a level of wisdom that needs to be there and experience when you're doing counter trend trading. You have to have a deep understanding of what price is doing. And most people don't have that. They can't call, where price is going on the month, let alone whether it's going to retrace or not, and where it's going to retrace to, and, whether it's going to be high probability or low probability, which again we talked about today, how to identify that. And today is a beautiful example of holding on to your narrative on the higher time frame. And why didn't I take a short today? You know, why did I stick to the buys? Why did I not throw away the likelihood of price coming up to the Asia high up here because of that higher time frame? Right? You know, I gave 2 good opportunities. I didn't mention this as an opportunity, but you can clearly see it. Once it ripped above this high, even if you miss that, who cares? Don't think you missed anything, because you can always catch the secondary opportunity. I said that I didn't want to see it come back down through this level. This was my line in the sand. It never even attempted to get down there. My confidence in executing this trade versus yours, there's a huge experience gap, right? So I may call this is why signals are stupid if you're trying to learn. Because I have experience using certain things that I'm sharing. ICT does, you know, everybody that you learn from has a certain experience, certain conviction, certain trust. And if you're taking signals and you're not focused on the why and the deeper explanations that don't take 5 minutes, right? You're not going to be able to benefit from signals or anything that anyone teaches you. Because just because someone says to get in and this is their model, that doesn't mean that they've now transferred their trust to you. Like, you have to sit there and listen to why it's trustworthy. What is this person thinking? So the next time when there's a signal, I can be in sync with their thinking and what they view in price. So then that signal or those signals can become more important, more helpful, more effective. And you're not running around with your hair on fire thinking that the world's going to end every time you execute, because you just don't know whether it's going to go up or down. You're just taking this person's opinion, like uneducated action using their opinion, you know, because you're unaware. That's why I spend so much time being so detailed, and a lot of people don't like it, and it's really unfortunate because they're lazy, you know, and they just want me to say, oh, buy here, sell here. But even then, if they lose, whose fault is it? They're going to blame the person giving the signal when they themselves are lazy. Like, they don't spend the time to be able to understand the person. You know, they're just hopping back and forth from this dude's live call, this dude's live call. Oh, this guy's live. Let me go see what he's doing. Right? And it's sad. It really is. Because, you know, you guys are here all the time. You guys know that you know, I know that a lot of you guys are improving dramatically every single day. Even if in the face of things like this. This is a wonderful lesson today. You know, a wonderful lesson in understanding how I think when things look like this. And how I justify certain opportunities. Today I pointed out a very easy list to help you identify low probability versus high probability. Right? So, and then we talked about trusting your bias or your narrative on the higher time frame. Most people probably thought that this was a turnaround. It's going to target massive sell side. The world's going to end. The market's going to go to zero. It's going to just continue to drop. Buys are off the table because they saw this on the 1 minute. Right? When in reality, again, this was literally all manipulation, then time distortion, accumulation, okay? And then it distributed going to the buy side. This is a market maker buy model. Sloppy market maker buy model, but it's still got the elements of a market maker buy model. Remember, we're always in a buy or sell model. This run higher to go lower, that was a market maker sell model. Right? This drop that resulted in price pushing higher, that is a smaller market maker buy model. Okay? This high to that low, which ended up getting above this high, that is a market maker buy model. Okay? This drop that failed to break this low, that's a failed market maker sell model. Right? This low to that high that retraced and hit that fair value gap in here, the drop price, the reaction towards this low created a market maker sell model. right? This high to that low that tried to target this high, that's a market maker buy model. You're kind of seeing how this operates, how you need to start thinking about price action and why market maker models are so important and how we're always in a market maker buy or sell model. Mind you, all of this on this lower time frame is happening on the higher time frame too, right? The same stuff. It's all happening. Like a daily retracement higher that's going to go lower literally is forming the buy side of a market maker sell model, ready to drop on the daily chart. Even though on the daily chart it may just look like one candle or two candles going higher. And then smart money reversals, those form at higher time frame PD arrays or inside liquidity, like a high or a low, that can be reasonably expected to reject. Okay, so like, let me kind of show you guys this. I'll talk about this and then we'll put a ribbon on it. This is one of my favorite topics to talk about. And a lot of you guys probably haven't heard me talk like this about market maker models. Maybe you have. I did make a video talking about a lot of it, but like for example, this run higher, if it was to go lower, smart money reversal, right? Let's just hypothetically say it was going to go lower. Smart money reversal would be identified at a higher time frame PD array. Maybe a order block, a fair value gap, the low of a wick or the middle of a wick, above a high potentially, right? Like this or like this. If you were to see price reject from there and you're expecting something like this to be targeted, that whole move, those two candles, three candles that form that going into that upper PD array, if you're bearish, that's the buy side of the curve if you go to the 1 hour, right? And same thing's true when it goes lower to go higher. These equal highs up here, this drop lower, I talked about a market maker buy model potentially happening here, right? When we went to the 1 hour on Sunday. High, low, accumulation. Do you see how this fits together? Right? How you're always in a market maker buy or sell model and why this is so important and how it can be so beneficial and why I love it so much. Once I learned this, I looked at things completely different. And hopefully it doesn't seem overly complicated because it's really not. If you don't understand market maker buy or sell models, the different components, and haven't studied it, obviously if this is new, it's probably like, wait, what? Maybe it makes a little bit of sense, but it'll make more sense when you go into the chart. Right? This same phenomenon is happening when you're on the 15-minute and you see a 1 hour retracement or a 4 hour retracement. Right? If it's going higher, there may be a 15-minute market maker sell model happening. Within that 15-minute, if you go to the 1 second, there's many market maker models within that forming that buy side retracement to go lower on that higher time frame, but it's on that lower time frame because everything's fractal, right? Like this is a higher time frame market maker buy model. Each one of these retracements that goes lower, that's setting up a market maker sell model, right? And then once it breaks above this high, we now kick into buy programs and market maker buy models in something like this that's going lower will fail. But market maker sell models will print. On the right side, the opposite's true, right? If we're going bullish. Market maker sell models may fail, most likely will fail. Sometimes they complete because they maybe sweep lows and then go. But you want to expect sell models to fail and buy models to deliver on the right side. Every retracement lower should be looked at, if it's going to go higher, as a market maker buy model. Every retracement higher to go lower should be looked at as a market maker sell model to go lower. Right? All of this is, again, working inside something that's happening on this time frame. Right? Something that's happening on this time frame. Same idea is true on these upper time frames. Price goes lower, if it's going to go higher, that will probably have a market maker buy model. Right? But I'll leave that for you guys to go study. Okay? So hopefully what I just mentioned to you and this whole day has been a pretty useful experience. I know for a fact the market maker stuff that I just said, if you're paying attention and you've maybe been trading for a little bit and you've dug into market maker models a little bit, or maybe even if you haven't, either way, clearly it looks like there's something to that. And now when you go into your studies, a whole new world's going to open up to you if you haven't used this concept and aren't aware of it yet, right? But yeah, so with that being said, I think I've held you guys long enough. There's been a lot of things that have taken place this morning. Hopefully, again, you guys got value. Hopefully you understood all the key elements from holding on to your bias and narrative, how important that is, how bias and narrative are different, market maker models, like I just talked about, how price manipulates, creating power 3 all the time, right? From the 1 hour, 4 hour has it 2, daily, weekly, how important that is, how important it is to hold on to your narrative if the higher time frame PD arrays are holding in price. How to identify high probability and low probability. These are all things that we've talked about today. And obviously we're gonna, I always amplify everything, right? I've talked about all these separate topics numerous times. So hopefully, you guys that have been here have gotten value. Hopefully, you guys that are new here are also getting value and saw that today showed this community is worthwhile. The more you stick around, the more you'll learn. Every time you hop on a call, there's something new to learn or reinforce. Every single day in my private community, people are just getting better and better. Every week here for you guys on YouTube, because I go live twice a week here on YouTube. Hopefully you guys are improving as well. All year we've been correct on bias when it comes to weekly and monthly perspectives. Quarterly as well. I've been correct every quarter as far as where it's going to end up. You don't have to take my word for it. You can go look at the videos I've done and see what I've said. And if I was lying, I have some of my private group students in here. They would call me a liar. I'm putting my neck on the line when I say things like that, and it'd be embarrassing if I was lying and I was to get called out, right? But that's not a possibility because I don't lie. So yeah, hopefully you guys got value. Again, God bless you guys. Appreciate you for hopping on as always. We'll be live again on YouTube on Sunday. For those of you in my private group, get ready because we're going to be live again as always tomorrow and every day except Saturdays moving forward, right? As always. All right, so don't do anything crazy today. If you want to observe the PM session, definitely go do that. Trump's speaking, so maybe something can open up. Otherwise, we may just run Asia's high and come back into the range and kind of be stuck. It's been a very choppy, nasty day. Doesn't mean there hasn't been opportunities. We pointed out a lot. Hopefully 1 or 2 of them made sense to you and you could justify maybe taking action in the future, or maybe today proved that yes, there are days that you should wait, and hopefully that list of things I gave you for identifying high probability and low probability I gave earlier today hopefully can be useful for you engaging when you should push or trade at all and when you shouldn't. Okay, and I'll go over it more obviously as the days pass, weeks pass. But yeah, if you guys have any questions, let me know. Hopefully you guys have a good rest of your day, and I will talk to you guys here on YouTube on Sunday, and you guys have my private group. I'll see you guys tomorrow. Take care, guys.